You are listening to chartingwealth.com for Wednesday, the 18th of October, 2017. We see that stocks, both the S&P 500 and the Nasdaq 100, are up for the day. Bonds are also up. Gold is down. Let's jump right into the S&P 500. We see on the weekly chart lots of up movement starting all the way back on the week ending the 1st of September. We've continued to have up movement, strong up movement, just keeps going. Didn't have a weekly vertical crossover. It was a very weak one on the 29th of September, but boy, it boomed after that. Several of you have asked, how do you play that when it is such a weak crossover? Well, of course, you don't have to take the risk and play it when it is as weak as it was on the 29th. Of course, it was much stronger on the 6th, the week ending the 6th. So again, you could have waited till that following Monday around 10:30, looked on your 30-minute chart and make sure that the market was still going up, or just use your 4-hour chart, and if it looks decent, jump in then. So when you have weak vertical crossovers on the weekly chart, you can wait till the following week until it's proved itself. So we see that the derivative oscillator continues to gain energy, and that the PPO, which is very similar to the MACD, those of you familiar with that, continues to move up. Let's look at the 2-day chart as we drill in a little deeper. Now the 2-day chart, are things topping off? Not necessarily. We could be seeing just a bit of a slowdown in the continued rise. Market's hitting around where it was back on the 2-day candle ending on Tuesday, the 10th of October. Again, hit a high there and then just has slowly been moving up, but we've been able to connect virtually 3 2-day candles. Again, this is only the first day of the latest 2-day candle. The price percent oscillator not moving at the same strong up movement it was all the way back till around the 10th of October, but still moving up. Derivative oscillators lost some of its initial strong energy, but again, it still moved up a little bit over the course of the last day. So we'll just continue to monitor. If we start seeing that bleed off, we want to pay a lot of close attention to that. What do we see, however, on this 4-hour chart? It still has not crossed over going up, giving us a jumping in point if you were waiting for our traditional way of jumping in, waiting for the 4-hour chart to basically reverse, which it has done, and cross back over going up. We can sort of see the digestion of the gains, again starting, well, on the as far as the 4-hour chart goes, around the morning of the 13th. We've seen things sort of slow down and slip sideways. And again, we had the 4-hour crossover going down. Well, it actually occurred all the way back on the morning of the 11th of October, that Wednesday. So again, interesting to watch how the price percent oscillator, and you go all the way back to derivative oscillator, it rotated over to the negative, strangely enough, all the way back on Monday the 9th in the afternoon. So very interesting why the market did that. Part of it is the long sideways slide. The market topped for quite a while there on the 5th of October, and then as it slid sideways, what happened is the momentum, the oscillation got lost and things started flipping over, going down. So until there's stronger movement, and you can see we have green candles followed by red, by green, by red, and that pulling back and sideways slide is what makes the price percent, makes your oscillators not all that valuable. So again, we want things to be trending. The trend is your friend. Sideways slides and slippage make it hard to track. We realize that and we know that. We take that into account. That's the reason that we wait for the pullback, and then we want to see a stronger surge before we'll get in on our traditional method of entering trades. That's where we're on the S&P 500. Let's keep moving through these charts back to the weekly chart, and we'll go to QQQ, of course, the Nasdaq 100. What do we see going on there? Well, the Nasdaq 100 is going into, we're about 2.5 weeks through strong up movement on the Nasdaq 100. Maybe at the end of the week we'll have a crossover. We do see that on the weekly chart, the derivative oscillator crossed over going up on the week ending the 13th, but that is not the decisive indicator. Our decisive indicator for up movement is the price percent oscillator, and it may be at the end of the week doing that. We'll just have to wait and see. It has not happened yet. What's going on the 2-day chart? Well, of course, it crossed over going up. It always portends the weekly, almost always. Sometimes they can cross over together when there's strong up movement after a pullback. But what do we see going on? Well, it crossed over going up on Friday, the 6th of October, and we have, again, unabated up movement since everything turned green back on the 2-day chart ending on the 28th of September. So again, strong up movement, things well above the 2-day trend line. So we'll just continue to watch and see what we see. And what do we see going on with the 4-hour chart? Well, it is still in an up movement, has been for quite a while, going all the way back to when it rotated over going up on Thursday afternoon, the 28th of September. So again, we'll just continue to watch, see if we have a weekly vertical crossover going up at the end of the week. That's yet to be seen. We've thought it's going to happen over the course of several weeks and just hasn't. So we'll see what we see. What do we see going on TLT? Remember, we had a weekly vertical crossover going down back on the 29th, the week ending the 29th of September. We then had a strong following week of down movement, and then things seemed to stop. We had a green spinning top, means indecision, and looks like things trying to turn around. What we see so far is a green open box candle so far for the week. Derivative oscillator is still in the negative, and of course the price percent oscillator has gone flat, hasn't crossed over going up yet. When we drill into the 2-day chart, we of course see it's getting close to a crossover going up. Hasn't happened yet. Hasn't happened actually over about the last day and a half. It's topped out at about the same point. We'll continue to see what we see there. Price movement has moved above both the 2-day, of course. It did that all the way back on the 2-day candle ending on the 10th of October and is now pushed through the weekly chart. So again, if you were paying attention and been into a down trade, that ended all the way back when things crossed over going up on the afternoon of Monday, the 9th of October, and things have steadily moved up since then on that 4-hour chart and TLT. So we'll continue to see, again, if we do have that 2-day vertical crossover, of course, it'll mean that even if we do have a rotation over on the 4-hour chart, you don't have a jumping in point, but continue to keep your eye on that 4-hour chart on TLT. If it does top off, and it's been hitting about the same point, and rotates over going down, there is a huge distance, though, between the red signal line and the blue price percent oscillator. But if it flips over going down and both your weekly and your 2-day are in down moves, you want to jump into that, my friends. You want to jump into a good virtual practice trade on that. Okay, that's where we are on TLT. Last, let's go to gold. What do we see gold doing? Well, of course, gold crossed over going down back on the week ending the 6th of October. Since then, it has sort of slidden sideways. All the movement well contained within the down candle on just that week ending the 6th. So that is over the past one and so far a half week. And what do we see? We see indecision. We see green spinning tops. Indecision but tending up is what those green spinning tops tell us. What do we see on the 2-day chart? Well, of course, it never crossed over going up. So we still have pegged going down on both of them, and we have a red candle being drawn on the first day of the latest 2-day chart. Remember, no candle ends until it's totally drawn, and it's not drawn until its time period ends. So not until the close of business on Wednesday the 18th do we call the candle anything. It's just forming. It does appear to be forming down, though, and we're still below the price percent oscillator, although the derivative oscillator is continuing to lose downward momentum. But what we see going on is, of course, the price percent oscillator is clicking over moving down again. So we'll pay attention to that. Lastly, what do you see going on this 4-hour chart? It's getting close to crossing over, going down, my friends. Derivative oscillator's already done it. Watch it in the morning. You might have a jumping in point after that 4-hour chart closes at noon. If so, you may want to jump on that one and do a practice trade. Why? Well, your weekly chart and your 2-day chart are in down moves. Just pay attention. See what we see. Jump in when we can. My friends, that's where we are as we end the day on Tuesday the 17th, going to Wednesday, the 18th of October. We love to hear from you. You have questions, problems, concerns. Go to chartingwealth.com. Let us hear from you. If you're not already subscribed to the channel, you have every reason to do so. Why? Well, you get everything we have to offer for free if you are a subscriber. What does it cost? It's priceless, my friends. It doesn't cost you anything. It is our gift to you. But make sure that you use the gift. If you want to use the gift that we give you, that is these daily chart reviews, the free training that we have, all the great PDFs for the daily market worksheet, the weekly market worksheet, the trade worksheet, how to read a stock chart video, the LAT that we use at freestockcharts.com. The operative word there is free stock charts. Again, all that stuff's available. You need to subscribe. How do you do it? You go to chartingwealth.com and you sign up. Put in your name, your email address. You'll also get instructions on how to receive our text alerts when we have weekly vertical crossovers. Again, the best opportunity to get into winning practice trades. And why don't we say practice trades over and over? Because we're not a stock calling service. You're not paying us for investment advice, and we are not giving it. We want you to learn how to read these charts and take in all the information you glean, add to it your special spices, and when you start being able to read these charts and do successful trade after trade after trade, then and only then can you make up your own mind what to do with your own money. God bless, my friends. We appreciate you. Hope you appreciate us. Subscribe to our YouTube, Facebook, Twitter feeds. All that stuff is available for you. First and foremost, subscribe to our daily market reviews at chartingwealth.com, and feel free to write us always, CW@chartingwealth.com. God bless from the whole team here.